guys? So welcome everybody to the Masterclass 3.0. On this masterclass, we're going to be going over how to grow a small account, proper risk management, psychology, and at the very end, we have a nice strategy to present to you. I am your host, Mr. Banks, along with my co-host, No Risk, No Premium. Welcome everybody. Welcome, Chris.
What's going on? What's going on?
Cool. And as we go along, go ahead and throw your questions in the Q&A. We do have the chat open as well, so you guys can converse with each other, but try to get those questions in the Q&A so that we don't miss any of them.
Yep.
All right.
I'll be keeping my eye on that side of things.
Okay, cool. Thank you. Yeah. What will we learn today? How to build a small account, proper risk management, strategy to build a small account, and then the psychology that goes into it. Right.
Mm-hmm. Yep.
So what do I need to build a small account? Patience, discipline, and proper risk management are the main things you need to build a small account. Notice how I didn't say strategy. Well, it sounds silly, but maybe simple. Trading is 90% mental, guys. And the number one reason traders can't grow their accounts is because they lack taking this side of trading seriously. And this is what every trader should learn first and practice and really focus on throughout the rest of your career, right? There is no holy grail strategy you haven't found yet because it doesn't exist, right? I think this is where everyone kind of messes up and everyone gets lost in the sauce, right? You focus on, oh, I need this strategy. Or maybe if I go to this Discord, they'll make the right call outs, right? And I'll get rich, or I'll know this, I'll know that, right? You can know everything there is to know about the market. You could have a strategy that gives you 100% win rate. But if you don't have the right psychology to go into the trade, right? If you don't have the right mindset that goes into trading, you are going to lose and you will never be successful, right? So we could talk about, absolutely, we compound small accounts, the same old stuff that everybody spews, right? But I'm going to give you guys something a little bit different. The other day I had one of my students come to me and he said, I know all the technical analysis. I've been doing this for years and I just can't seem to get it. What am I doing wrong? And so I asked him, I said, well, what are you focusing on? Is it trying to find a right strategy? Is it just, are you focusing on anything that has to do with the psychology or the mindset of trading? And he goes, no. Right. I'm like, so you're not journaling your trades. You're not aware of, why you take a trade or how you feel, the emotions that go behind trading. And he says, no. Right. So this was kind of the basis of why I wanted to start this session with you guys, to help you, because a lot of people aren't going to talk about this side of trading or tell you that this is the first thing you need to learn, when in fact, this is the first thing you need to learn, right? Psychology is the number one thing you need to learn. Why? Because it's 90% of what trading is. TA strategy is only 10% of the game, right? It all comes down to the mental side.
Yep.
Right.
Well said. I mean, you got to think about it like this. The capital you're using to trade with has been hard earned at some point in your life. So you need to make sure that you treat it as such. Okay. Because if you don't, you're really disrespecting yourself. Okay. You're disrespecting your time, you're disrespecting your effort, and you're disrespecting the people that you may take care of. Maybe if you're a mother or father of children or a family or, an adult of a family or a parent. And you're just wheeling and dealing money around because it doesn't, that's not discipline. That's never going to get you anywhere in life. Okay. You guys, when you realize, look, this is your hard-earned money you are putting into the market and trying to compound or trying to learn this trade, right? Pun intended. And you're not taking it seriously, right? Mentally, you will never become successful, ever. So that's the first thing, guys. You have to, I think for me, you have to, even if you're not a full-time trader, which I would say majority of people aren't, you have to treat this like a profession, like it's your sport. Would you, I ask everyone this. They go, how many people in here, you can raise your hand if you want. Wake up, market opens 9:30, you up at 9, you take a piss, go down, get some coffee, whoa, to a computer, flip it on, open up Discord, open up Twitter. They're saying up, they're saying down. Man, I'll buy these contracts. Look at this trailer. Okay, let's do it. Market open, you go and shit yourself. How many people do that? I ask you this. Would you do that if you were going to your job? Would you stroll into your job late? Would you stroll in not getting ready for the day? Would you stroll in not taking a shower, brushing your teeth, having breakfast, drinking coffee, doing all these things? You know that you need to be able to perform for the job you get paid for. If you do not do that with trading, the first thing you do should be waking up, whether you meditate, whether you shower, whether you have something to eat, whether you drink coffee, you take your dog out. I don't care what you do. You have to do that, and you have to prepare, okay? Like this is your profession, because if you do not treat it with respect, the market will not respect you. It will chew you up and spit you out. So that's my first point. We don't really have it on the slideshow here. And I'm just going to be kind of interjecting, is treat this thing as with the respect it deserves. Okay. Because if you don't, you're fucked. Second thing, and I'll let Justin take over from here. You must prepare yourself for the day. This is the second part. Do you go into work at your job and ask your colleague, what are we doing today? No. Right? No. You should have your plan planned out, who you got to email, who you got to get on a call with, who you got to take a meeting with, what deal you have to close, et cetera, et cetera, et cetera. You don't depend on anybody else to earn your paycheck. That's the same thing in the market. If you wake up and say, what are we trading today? We aren't trading shit. Okay. And this is just the truth. And I'm always going to give you the truth. If you think this is a we thing, you're done. You're done. Because Bob, Joe, Billy, whoever, Susan, I don't give a fuck. Nobody has the same account side. Nobody has the same risk management. Nobody has the same strategy. Nobody has the same, like nobody's willing to like risk the same amount or lose the same amount, right? You could have somebody that just needs to make 10% because they got to pay an electricity bill. They just need to make 5% because they have to pay something and they want to buy something. You have somebody that's they're only going for 100%. They're willing to risk the whole trade. Some people, they're willing to lose all 100% of the trade to make their goal. Nobody's accounts are the same. Okay. So you should not be going into the day thinking that somebody else is going to trade for you or give you information. Or if they're staying in, I'm staying in. If that's your reasoning and rationale, you're done. Look, I'll drop my Venmo tab. The money you'd put in the market, send it to me. It'll be better in my hands. Okay. That's like a joke, but I'm being serious. Okay. You have to take trading for the respect of the profession that it is. Just like you would treat your own job that you feed yourself, your family, you put a roof over your head, you put a roof over your family. Okay. Think about it like that, guys. All right. Think about it like that. Okay, go ahead, Justin.
Well said. Yeah. So I'm going to dive into the psychology a little bit for you guys. Might take like 10, 15 minutes, but just hear me out, right? Technical analysis is powerful, right? Many traders find it hard to make money with it because they can't close the gap between the possibilities available and their bottom line performance, right? You rely on your emotions to trade versus what the market is telling you. The best traders, the most successful traders have a detachment from the market, right? They aren't afraid of being wrong, losing, missing out, leaving money on the table, right? So you have to get to this sort of mindset of being detached from it all, right? It's not about making money. It's not about missing out. It's not about losing. You can't be affected by any of that. So one thing is, a lot of people, when they go into the market or when they start trading, How many times have you blamed the market for your losses? And I'll just raise my hand right now,
Shit,
right?
fuck.
I used to do that all the time. Oh, well, the market did this. The market reversed on me, right?
The
I think we've
market
all,
maker, the
yeah,
market maker saw my entry. It's
yeah,
yeah. How many times? I'm like, I swear to God, the market maker's in our chat, man. He knows.
yeah, right?
Yeah.
So one thing we have to understand about the market is that the market is neutral. The market is neither good and it's neither bad ever, right? The market presents opportunities every single day, multiple times a day. And what we have to do as traders is look at those opportunities they present, right? You have to look at the opportunities the market presents and take them in a good light, right? We have to look at a high probability setup and see, okay, the market is presenting me with a great opportunity. And before I go into that trade, I have zero fear, right? You have to accept the fact that the market could play out in any way possible, right? And a lot of people say, oh, well, I accept that risk. I don't care what happens. And then what happens? You get into the trade, the market kind of pulls back just a little bit, and then you start panicking. You start getting fearful. You start getting emotional. You might panic sell, right? You might do all of these things that build up fear, right? So we have to accept the risk of what the market is, right? The market could play out to whatever it wants to do. It is neutral. It is neither against you or it is neither with you, right? So the market gives us opportunities, guys, and we have to look at them as great opportunities, right? Every single time we trade, we have to not be afraid. Fear is the number one killer for everyone, for every single trader, right?
Every aspect of your life, really, too.
Yeah, it's
You
true.
know,
And
I
I
mean,
think,
everything we're going to talk about tonight, it pours into every aspect of your life, right? It pours into every aspect of your life. Trading's like that psychologist you never knew you had. It will bring out all the emotions that you aren't intelligent enough to overcome or have be cognizant about. Really, it will bring out all of your emotions.
right? So you have to accept the fact that you might be wrong sometimes, right? You're not going to make money all the time. 95% of trading errors, I wrote some things down, are a result of fear, right? So 95% of your errors of why you lose are because of fear, right? So you have to truly accept that risk. And one of the things that humans naturally do is we attach likeness to something. So let me give you an example. This is from Trading in the Zone. If you guys have read it, good job. They talk about when you're a child and you experience a dog for the first time. Now, if that dog is mean to you, the next dog you see, you're going to automatically assume that dog is mean, right? You're going to be scared of it. You're going to be fearful, right? No matter how friendly that second dog is, you're always going to be fearful. And now let me bring that back to trading, right? We might hit some losses, right? If you're new to trading, you might hit some losses, right? A couple losses in a row. And then what happens when we go to trade that next trade? No matter what the trade looks like, we are now fearful because of what happened before, right? But no two trades are the same, right? No two trades are the same. So that's why we have to get rid of this fear or thinking that it's the same. Because what happens when we get into that next trade is, say it's a bull flag, and say the trade before we went into a bull flag and it failed, right? I think all of us know that a bull flag has a high probability setup.
Mm-hmm.
And say the last trade it failed, right? And now we go to trade a bull flag again. And now what happens? We subconsciously attach it to the bull flag that we traded before. And then what happens? We start nitpicking at the market. Oh, well, this looks kind of wrong. This looks kind of wrong.
Mm-hmm.
No, this trade's going to fail. I know
Yeah,
it's going
this
to
isn't
fail.
it. Yeah.
This
Mm-hmm.
isn't it. And then what happens?
That literally happened to our group on live from Friday. Wait, no. Yeah. This past Friday. Well, no, I'm sorry. The previous Friday. And then Monday, we had the exact same setup. I took calls on the bull flag. It broke through to the downside. Monday morning, we're trading. Justin goes, this is a bull flag again. And I was hesitant, right? And I was hesitant. And Justin took the trade and the group took the trade and it worked out great. And I sat there and went, wow, why didn't I take that trade? It was right there in front of me, because subconsciously it's you have to battle to be more mentally strong. You're not just born mentally strong, right? It's a habit you have to teach yourself and condition yourself all the time, right? And that was something I journaled down, was like, why didn't you take the bull flag, you freaking idiot? But that's something that's very true, is we do say, well, last time, look at last time is not this time, right? And tomorrow is not today, right? The market conditions are ever changing. Okay, ever changing. So there's rarely any two times where there is the exact same thing going on, right? From I guess technical standpoint. But good point there, Justin. I just want to point that out, because we literally had that.
Yeah, we had it happen.
We literally had it happen.
Just had it happen.
Mm-hmm.
But and then so the thing about trading is it's hard to understand or grasp, because how we are naturally as humans and what we naturally do, we have to kind of get rid of all of that when it comes to trading. Trading is pretty much the opposite of everything we naturally want to do, experience, feel, right?
Mm-hmm. So
it is a kind of a hard concept to grasp, but we do have to grasp this concept, right? So we do have to grasp this concept, so don't trade without fear. When we see an opportunity, we always have to look at it as a good opportunity, right? Mm-hmm. The market gives us those opportunities. And so we always have to be confident in the trade we're taking and the opportunity is presenting us, and not look at it fearful or comparing it to the last trade or this trade or anything like that, right? So there's a good psychology lesson for you guys. I don't want to go into even deeper than that, but that was a good overview of how you need to be as a trader, right? Mm-hmm. Let me see if we have any questions at this point.
Somebody has, they just typed in a good one, actually. Marco just typed in, he said, I'm doing options about 8 months. I turned 25K to 50K during 6 months. Congrats. Okay. Then things got bad fast. Mm-hmm. I'm down to 3K. Right? I'm down to 3K. Still feel it's enough to make a comeback, but it's really been tough on my mind and my heart. It took me years of blue collar work, old fashioned work, to build up that initial 25K. I feel dumb. Okay. Marco, I can, sure, you feel dumb. Okay, that's fine. I could tell you this. You are not the only person that has a story just like this. Okay. And some people may be worse. Okay.
I've been there. I've done that.
Yeah. Listen, we've all done that, where we've lost a lot of money, maybe overnight, maybe in a year, maybe whatever. Right. And this is the only thing I'll tell you is you said it still feels good enough to make a comeback. It definitely is. You have to be optimistic in that sense. Okay. But if you continue to do the same shit that you've always done that got you to 3K, you will not get back to 50K. Okay. If you do what you've always done, you will always get what you've always got. Okay. So the first thing I will tell you is this. Hopefully you've been journaling. If you haven't been journaling, start journaling. And the journaling is simple. You put your buy and sell level on a stock that you're going to trade. So there's 2 trade setups for the day. Okay. Once you take the trade, you talk about the entry, you talk about the exit, you talk about why you took a trade, like what was all lined up for you and your strategy, etc. If you lost a trade, you have to put why you lost a trade. Well, it should be very easy for you to figure out why you went from 50 to 3. And trading is almost as simple as this. And it's going to sound very cliche, but just listen to me. Do the fucking opposite of what you did when you took 50 to 3. It sounds stupid, right? But listen, hear me out. I chased every trade. Write down. Don't chase trades. Okay. I played breakouts. Don't play breakouts. Right? Okay. You guys are following me here, right? A lot of times the answers are the opposite, literally the exact opposite to what we've been doing. Okay. To what we've been doing. Right. So Marco, I do believe that there is you have more than enough fair share to make a comeback. Absolutely. Everybody does. Okay. Everybody does. As long as you're still breathing. Absolutely. It's your choice if you're going to do that though. It's nobody else's choice. Okay.
And let me add to why that happened to you. Right. So when you first started trading and you took that to 25K, what happened?
No, he took 25 to 50.
25 to 50. Okay.
Which is great. That's a double.
Yeah. So what happened in that time, right? You traded without fear.
Mm-hmm.
One thing that might have happened was you might not known that much about the market, or you might have known a little bit, and then you started losing, right? And what happens when we lose? What are we naturally programmed to do about pain? We don't want to feel pain, right? We don't want to feel pain as humans. So then what we start doing kind of goes back to what I was just talking about. So now you got those losses, right? You were doing good, you're winning, and now you started hitting some losses. That equates to pain, right? We make that to pain, right? So as humans, we don't want to feel pain, right? So then what do we start to do? Again, we start nitpicking the market. We start nitpicking our trades, right? You know, we get into a trade, maybe it pulls back a little bit, goes red a little bit, and then I panic sell. Oh, I don't want to lose money. I feel, I
Or
don't
you
want
end up
to.
not taking that perfect setup trade that you've been taking that took you from 25 to 50 because you went, fuck, last time I got in, it reversed on me. And it may have reversed 1 out of the 10 times that setup came in. Where if you would have just taken that 9 times out of 10, that setup, whatever you're trading, usually works out. And then he said this too. He added to it. I wanted to add this. He says, yeah, I'm more careful. I was more careful in the beginning. I had more convictions in my plays, and this is the most important one. And I gave contracts a lot more time. Interesting. That's something that we discuss a ton in our group. Said I started getting more aggressive. I hear y'all though. Listen, we are programmed to think, fuck, I just lost $1,000. Okay. Let me put back in 2,000 and I'll make 2,000. I'll still be up 1,000. If you start trying to reason with yourself like that, you've already lost. Okay. You have already lost. First off, you're searching for a trade. You're not letting the market come into your bid. When it comes into your bid, it's because you're waiting for your setup to develop. You're pushing your setup onto the market. That's never going to work. Okay. So then you get aggressive. Then you size too big. Then you just took that $1,000 loss, just turned into 5,000. And now you're freaking out. And usually those days, they are followed by even worse days, right? Unless you get up from the computer and absolutely leave, right?
You can't be you against the market, right? You can't be a battle between you and the market, right? It can't turn into something like that. Well, the market, maybe, I lost money with the market. Now it turns into this battle of, well, I need to beat the market.
Yep.
And it goes next to this next question we have. Same here. I joined, did 100 contracts, doing less contracts and learning TA from guides, still not yet recovered. Let's go. So one thing we also do is, oh, well, maybe I don't know enough about the market, right? Well, I'm losing now because I don't have the right strategy. I don't know enough about TA. I don't have enough knowledge, right? I think a lot of us, we kind of go that route. And now we learn more and learn more. And then what happens is we get into this cycle of, well, now I know so much about the market. I expect the market to win, right? I expect to win because I know this much about the market. But that's not the case, right? That's not, you can't like battle something about that, right? You can't battle, try to beat the market in that way. The more you know, the market owes you nothing. So you have to know that is that the market owes you absolutely nothing.
Market
right?
doesn't give a shit about you.
Right? It is neutral. It is neutral. So if anybody tries to tell you, oh, the market sucks today, oh, the market's this today, guess what? I guarantee somebody out there saw an opportunity in that market that day that you thought was bad, and they made a shit ton of money that day. Right? So it's all about perception and the awareness of your mind state each and every day before you get into each trade. Right? So trade without fear. I'll just end it here. Trade without fear. We have to accept all the risk, right? It's not about our knowledge of the market. It's about seeing an opportunity that's presented to us and being confident in it and looking at the good possibilities of the outcome and truly accepting that the market could play out in any way, sort, or form, right? Can't be afraid to be wrong, losing out, missing out, or leaving money on the table. Now let's go to our next section. So we're going to break down the 3 things that we talked about earlier. Patience, right? Patience. To build a small account, you need to have patience to wait for your A+ setups. And we'll get into what I think is an A+ setup at the end of this, right? We'll go over the strategy at the very end. But patience, right? When you have a small account, you have to trade less. You
Absolutely.
have to trade less. I see a lot of people with small accounts like, well, I need to build it. So they try to take this trade and this trade, and they just absolutely demolish their account, right? You have to be trading less. You should only be trading, I would say, maybe 1 to 3 times per week if you have, especially if you have a small account. Really in
Absolutely.
general, but if you have a small account, you should not be trading every day. Absolutely not.
Mm-mm.
Should not be
Mm-mm.
FOMOing. I think that goes without, being said, but no FOMO. You can't have any fear again of missing out on anything, because guess what? The market's going to be there tomorrow. It's going to be there the next day.
Market
There's going
opens
to be another
same
trade.
time every day.
There is literally endless opportunities every single day that the market gives you. And like we just talked about, you have to look for them, right? You have to be in the right mindset to be open to those opportunities.
Yep.
Not rushing into trades at market open. This is a big one. And the big one I see a lot of people do is they think it's kind of goes back to the FOMO, right? Oh, well, we have some, obviously you see there's big moves that open. Absolutely. There's big moves up and down. You can absolutely hit 50%, sometimes even 100% like that at open, right? But what happens? The market reverses really fast. It moves really fast. You're not letting it play out to give you a nice setup, right?
Mm-hmm.
And how many times do you lose it open and then you wait and then the market sets up for a perfect opportunity later in the day, but you're out of money to trade? Or you lost money and now you're like, you don't want to trade. And now you see that setup as a bad setup or whatever, right? So don't rush into trades at market open. I promise you, I guarantee you, there's multiple opportunities throughout the day. And when the market starts to move a lot slower and giving you that A+ setup, it will happen more intraday, towards the middle of the day, right? Towards the end of
Mm-hmm.
the day. And you can take a trade then and not be so, whipsaw kangaroo market like like the open is, right?
The open is extremely volatile. Okay, it is extremely volatile. And a lot of times it's full of fake outs, it's full of liquidity grabs,
Mhm.
right? And that's why the first 30 minutes, especially, I have the 30-minute rule, called 30-minute rule, right? I'm sure there's a ton of other people have it too. I'm not saying that I coined this phrase. I don't like to really trade the first 30 minutes. I don't like to enter a trade. I mean, people in the Wolves, they'll tell you. It's usually after that 30 minutes is I finally see the setup, that I let the market come to my bid, and then we get into the trade then, whatever we're trading, right? And the reason why is because after that first 30 minutes, you have a little bit more either confluence or confidence or confluence of where the market could go that day, right? There's sometimes where the market might beeline on the open, it might just have all this profit taking. Everybody's like, shit, it's crashing. Oh my God, this is it. We've got to buy puts, you buy puts, you buy puts. When in reality, it was just people taking profits. And next thing you know, you got the whole set of buyers waiting down, right? And you're selling and they're buying, and it pops right back up and you get reversed on, and you're pretty much down on that trade and there's no coming back from it. And that if that happens within the first 15 minutes of the market open, you're defeated as a trader usually, right? Guys, the market's open for 6.5 hours and full of opportunities all day long. Okay. So guys, I use this phrase as well. Don't blow your load. Don't blow your load at open, right? It's a corny phrase, whatever. Don't use all your buying power. I mean, it's not meant to be a sexual. It's meant to be, don't use all your buying power. Don't YOLO a trade. Don't oversize a trade when shit is so unsure, right?
Yep.
Right.
Uh,
I mean, trading girl. So yeah. So listen, trading yoga girl. She's been following our YouTube for a while. She's just joined. She's been doing great. Okay. She's been a great student of the game, been doing her homework, been contributing to the chat, been saying very great insight to the team. She just said, I've stopped trading the first hour since I've joined the group, barely taking trades and finally rebuilding slowly. No losses, just skipping the mornings. And it's been a game changer.
yep.
Right. So
Proof is
congrats.
in the pudding.
Congrats, yoga girl.
So one question here, how do you deal seeing a contract is already up from when you want it to get filled, but it still has room to go? I always get scared to get into a trade when I see it's already up 10%. So if you're already scared, you shouldn't chase it. And if a trade is already running without me, I'm not in it. I'm not in it. I'm not chasing it. I don't care if it goes 1,000%.
Yep.
I missed my entry. because I
Yeah,
know that I'll have another opportunity to take another trade, right?
absolutely.
I
Absolutely.
missed my entry, right? Because that's going to set you up to fail, right? Because now it's
Hmm.
chasing,
You're just
it's
chasing.
already up. And then say, like I talk about, it pulls back a little bit, right? You chase it, it pulls back. Now it starts to go red. And you're like, oh, maybe I caught the top. And now you're going to panic sell. It's going to induce fear
Yep.
inside of you, right? So we need to set ourselves up also to not the best way possible so that we don't have these kind of emotions, dwell in us, right?
Absolutely.
So if the
Absolutely.
trade is going and we missed it, we missed it. I'm personally not entering into the trade. I
No.
will go try to find another opportunity somewhere else, right?
Absolutely. I think a good thing that could help you with that too is when you say, you've seen your contract, it's up 10%. Well, if it's up 10% from, a lot of it has to do with what kind of contract are you trading? Is it a 0 date that's super volatile? Is it something long dated swing? Is it have more time on the contract? But regardless of that, one thing to help with that FOMO of, oh shit, it's already running. Should I chase it? Should I not? I have a rule. You want to buy calls, like, because we all take our entries on different time frames. I like the 5 and 15 personally. You take calls on a red candle, okay, and you take puts on a green candle if we're trading options. What does that allow us to do? The premium of the contract is most in our favor. So in the example of the contract ran 10%, right? If it ran, that means the underlying candle of the stock that you're trading the options on is about more than likely green, right? It's a green candle. Like say you're taking calls. Okay. Well, it's likely that that candle could pull back. So maybe you wait for the next 5-minute candle, because if it's running in the direction already and it pulls back, it's more than likely going to play out. Your trade will play out. So if you wait for the next 5-minute candle, let's say maybe it dips down just a little bit, there could be a possible entry to get in, and you didn't chase, and it may be your original entry, you're up only maybe a couple percent from it, right? So there's something to think about too. Always want to buy when the premium is most in your favor. You could do that by buying calls on a red candle and puts on a green candle, right?
Cool.
Go ahead.
All right. So I don't know. I'm just going to go through this slideshow and the information for you guys, and then we'll answer questions at the end, just
Yeah,
because
that
I
might
know
be
it's getting
best.
late on the East Coast. So I'll go
Yeah,
ahead and just get through the presentation, and then we'll start answering questions at the end from now on.
perfect. Yeah, perfect.
But keep asking them. So going in, yeah, not caring about what others are doing. Who gives a fuck what anybody else is doing, how much money they're making, if they're in a trade? Don't care. It's not my trade, right?
Nope, nope. Listen, does that person pay your bills? If they go to the gym, do you get skinny? If they eat well, do you get skinny? Right? If they make a ton of money, do you make it too? No, no. So stop worrying about what everyone else is doing. That's the other thing. There's no two accounts that are the same. Okay. No two accounts are the same. So don't worry. Everybody's running their own race. Worry about your race. Can't run my race if I'm just standing there watching somebody else run theirs. Okay.
Yep. And then only waiting till you take that A+ setup, right? Only taking trades that give you the highest probability of success. Discipline. To build a small account, you need to have discipline, right? 2, stick to your rules and never breaking them. Stick to your strategy. Play the same strategy over and over and over again. Only trading those A+ setups. Being disciplined in all areas of your life, and not keep trading after losses. If you lost, don't try to make anything back. It's probably the
Yep.
last thing you need to be doing. But I put a picture
Absolutely.
here of a man doing the dishes, right? Because discipline translates into all areas of your life. If
Yeah.
you're not doing the dishes in the sink, picking up trash around you, making
Right.
your bed, right? If you're not staying disciplined to do these things around the house or in your life, there's no fucking way you're going to stay disciplined when it comes to trading.
When yeah, to money, when the emotions get high. Absolutely.
Exactly.
That's a great point. Listen, guys, I've read a lot of self-help books, all this kind of stuff. I've listened to podcast, all this. Listen, there's one thing that anyone that has any amount of success in their life has in common. It's discipline. And they're not only disciplined in one area of their life. All facets of their life, they have discipline. Okay. So that's one thing I would suggest everybody, especially with trading. It's such a stressful. This is like this profession has the most release of cortisol into your body because it's so stressful. That's a stress hormone. You have to do things outside, okay, of trading that take cortisol down. The big thing we talk about in our group a lot, and Justin and I talk about all the time, is going to the gym, sweating, getting outside, doing these things that can allow you to bring your cortisol levels. It's already stressful enough. You need to do things that help you have more mental clarity or mental stability, right? And have more emotional, like cognitive of your emotions as well. Okay. And then not keep trading after losses. Guys, it's okay to turn your broker off. I have a rule when I'm trading futures. Even when I have a good trade, if I've hit my goal for the day, I literally close NinjaTrader out completely and I don't turn it back on. It's the same thing after you take a loss. Okay. It's okay to stand up. I stand up, I get my dog, I go outside, we take a lap around the street. Right. It's okay. You need to get away, mentally disconnect for a second, guys. Do not overtrade, because the biggest thing you'll do is go back and revenge trade something and you'll make your loss even worse. Okay, go ahead, Justin.
Yeah. And then the last thing I'll say about that is whether you win a trade or you lose a trade, every single time you should step away from the computer, right? You need to make sure that your emotions are in check. So I don't care if you lost and I don't care if you won. Either one, step away from the computer, make sure your emotions are in check before you come back to make the next trade.
Absolutely.
All right, proper risk management. Kind of goes back to, we had a question, do you play in the money, at the money, out the money contracts for small account? Oops. To build a small account, you need to have proper risk management, right? Buying time on your contracts. You will play with a portion of your portfolio, and I'll break this down in a second. No risking it all on a zero date. I don't care about how many 1,000%, 10,000 percenters you see on FinTwit, right? That's don't do this. Using only profits to trade towards the end of the week, right? This is a big one. People get to Friday or Thursday, they're up big on the week. And what do? They size so heavy that they eat all of their profits are gone. They lose and they eat all of their profits, right? So guys, you need to be playing only for prop. So if you're at $500 on the week and you get to Thursday, you get to Friday, play with $250, right? So even if it goes to zero, which you should have a stop loss, it shouldn't go to zero. But even if it did, you're still up $250 on the week. Don't go sizing in, oh, I'm up $500 on the week, and now you're sizing in $1,000 per trade. Don't do that.
The quickest way to ruin your weekend before it even starts, right? Quickest way.
And then no revenge trading to make it back, right? No revenge trading ever, right? You'll never make it back. If anything, when you start losing, you need to size down, right? You need to size down if you start to lose, right? And get confidence back in yourself. So buying time on your contracts, right? You should be buying weeklies. If you're playing SPY, it should be at least 1 day out, if not 2 or more, preferably playing a weekly, right? And what I personally like to do is play at the money, right? Or slightly out the money. So I'll play like 1 or 2 out the money. But the thing we teach the most about this is, if you don't think that contract is going to go in the money, you should not be buying that contract. So let's just say Amazon is at 90 and you buy 120, right? Do you think it's going to hit 120 by Friday? Say it's Monday. No, you should only be buying contracts where you think they're actually going to go in the money, right? And I think
always ask yourself, always ask yourself before you buy a can this go in the money? Can this go in the money? Today, 408 held. We knew in the chat, if 408 held, what are we going to do? We're going to get long. We're going to get long. We weren't even playing today's expire. We were playing tomorrow's, and we bought the next level. I believe we bought
412.
412. Okay, so 410 was the next level, but could 412 go in the money? Absolutely. Did it go in the money? Absolutely did today, right? You have to ask yourself, can it go in the money? Okay, I'm not going to take 420 calls for tomorrow, okay, because we're at 408, right? That's got theta. Everything's working against you. That's a sucker's bet, in my opinion. Okay, that's a sucker's bet.
Yeah, and don't buy contracts just because they're cheap.
Oh, yeah. Oh, God, we had that today. Just because something's cheap doesn't mean it's good, right? Doesn't mean it's good. And if you are looking like, oh, I've only got $50, I have to go look for a $50 contract. No, that's not how you do that.
Yeah.
Okay,
there's a lot of tickers, and you could put them down here. Coca-Cola, Macy's, American Airlines, Bank of America,
Hold on. Let me type these
AMD,
in. BAC, CCL. What do you say?
yeah,
KO,
CCO, KO,
Ford,
AMD,
AMD,
Ford,
Ford. Okay, hold on.
right? So
BCL.
yeah, we're giving you guys all of these,
These are great small account tickers. Okay. Why? Because you can still buy at or near the money.
and they're still
Okay.
cheap.
On a weekly or bi-weekly contract or expiration that you can get for under $1. Okay. So Bank of America is great. AAL is great. KO is great. Ford is great. Sherilyn kills Ford in our group. AMD is good. That's all I can think of right now. If I think of any off the top of my head, if you guys have some that you guys trade in here that are great small account tickers, okay, go ahead and type them in there, guys. Go ahead and type them in there. Might be something that we don't trade that you guys have knowledge on.
So after this slide, if you guys keep waiting, after this slide, we'll get into the strategy. You don't want to miss that. You guys don't want to miss the strategy. So let me just break this down. And in this portion of this presentation for you real quick is I like to use $2,500 as an example, right?
Yep.
First things first, if you're in debt, you should not be using money to trade. You should be paying off your debt. I'm just going to throw that out there.
Oh, that's
Nobody else
yeah.
will tell you that. You should not be trading if you're in debt. Pay off your debt first, please. So let's break it down. $2,500 is a small account. I think that's a good number to start with when you start trading.
Yep.
And I use a 20% rule, right? So $2,500 broken down by 20% gives you five $500 trades, right?
Bing bong. Yep.
You use that $500 per trade and you look for 20%, right? And that's going to equal $100, right? So say you had a 10% stop loss and it hits, now you only lose 2% of your port or $50 of your port, right? So you only lost $50 of your $2,500 port, right? So you don't necessarily need to take this 20% or $2,500 super literally or apply it to everything, but you need to apply the fact that you need to only use a portion of your portfolio, right? You shouldn't be using all of your portfolio to take the trades, right? You shouldn't be going all in on your trades. So this example is a great example because it's saying, okay, this gives me 5 trades out of that $2,500, right? It gives me a good risk to reward ratio, right? A 2R, $100, right? The $500 to make 100 plus. And then when we had the stop loss, right? We're only losing 2% of their port. We're not losing 10%, 15%, 50%, right?
Yep.
We need to make sure we keep our losses small and our winners big. And I'm going to show you guys the strategy right now.
Yep. Let me add one thing just before you hop over here. Guys, look. Starting with 2,500, right? Broken down by 20%, $500 trades, 20% gain on each one of those trades, $100 each. Okay, right. Look, $100 because of some screenshots you've probably seen on Twitter or people that you know are making 10,000, 100,000, making 100,000 probably doesn't get you going, probably doesn't get the blood going. I get it. But listen to me. Trading is not get rich. Trading is not, I started trading tomorrow, I'm going to be a millionaire. That's not how this goes. Just like everything. I don't work out once and I'm a bodybuilder. I don't eat one healthy meal and I'm skinny. That's not how that works. Nothing in life works like that. How trading works is if you have the discipline to consistently make $100 every day, that is, how much is that extra a year? $100 is 50K? Oh no, it's 25 grand.
Yeah.
It's an extra 25 grand. A lot of you guys aren't trading full time. You might already make 50 grand, 100 grand, and an extra 25K. How would an extra 25K treat you? Not that bad. Down payment on a house somewhere. In a lot of places, not California. Don't move to California. I live in California. Don't move here. Okay. But listen, guys, that's it. $100 doesn't sound sexy, but what if you did $100 a day and you did it for an entire year?
Yeah. Especially if you're working, you got to think about it as a raise, right? This is my raise.
Yep.
Right. I got a $25,000 raise.
Yep.
I think any of us will take that when we're working a 9 to 5, right?
Yeah, absolutely.
I'll take a $25,000.
Yeah, absolutely.
Yeah.
So guys, think about that for a second, right? Think about that. Okay. Stop swinging for the fences. You want to trade to execute. You don't want to trade to make money. If your sole attachment is to make money, you're too attached to it. Trade to execute. Money will always be a byproduct of great execution. Okay. Money will always be a byproduct of great execution. That's with anything in life. In sales, if you're closing deals, right? Anything has to do with money and you're executing well, right? The money will come.
Yeah, we
Okay.
don't trade to make money, we trade to execute, right? If
Yep.
you execute a great trade, like Chris just said, that money will always follow, right?
Yep. Always.
Always.
Always. Always.
So trade to execute, not
If you
to make money.
execute a business plan to the T, you will likely make money, right? But if you go into business trying to make money, you ain't going to get far. You
Nope.
might have some success in the beginning, but if money is the only thing that fuels your drive, it's going to end up getting you in the end. And that's
And
just the truth.
so, yeah, it's true.
Yep.
So proper stop losses that you could do, OCO orders, also known as bracket orders. So Webull has this TOS. We're not going to break these down super, but I'm just going to overview them real quick.
Yep.
Bracket
I'll
orders
give
allow
my favorite
you
too. Go
to
ahead.
sell. It sets a sell order and a stop order at the same time. So
Yep.
essentially, you enter a trade, it will trigger a 20% stop loss and a 50% sell order.
Sell
right?
order. Yep.
Yep.
Mm.
So there's
Yeah.
one way to enter a proper stop loss, right? It's called OCO orders or bracket orders, right? Another one, which a lot of people do, which I personally don't like this one, but regular stop loss is set at 10 to 20% after you enter the trade, and then you move the stop loss up to break even once the trade goes green, right? So I think a lot of people, they're in the trade, it goes green, it's going green, they're holding, and then it reverses, they took no profits. Well, if you're in the trade and you move that stop loss to at least break even,
Yep.
you're never going to lose money.
You won't lose money. You never let a green trade go red. Never let, we had that example today. Never let a good trade go red. Right. Go red.
And this is my favorite way to set a stop loss, right? So
Yep.
this is when you start to really understand levels and price action, is your stop loss is at a certain level to hit, right? I think the other day we were in the Google trade. We took to Google for 91%.
Google
right?
and SPY were perfect examples
So
yesterday and today.
We were flagging out yesterday on Google and the trade went down about 15, 20%. And everybody's like, well, didn't it hit your stop loss? And I'm like, no. I'm like, it literally flagged out to the pre-market high, right? So that's a major level that was resistance, now turned to support. And now we're also bouncing off the 13 EMA. Yep. So no, I'm not going to let that just get hit, right? We're still have a solid level, right? So once it breaks levels is when I will set a sell order, right? So I think level stop losses are the ultimate way to go personally.
Yep. So how I do it, and I'll just give I have a 40-100 bracket order that I typically use. Okay. 40% stop, 100% profit taking, right? And what that allows is my stops and profit are wide enough that, let's say I take an entry and I have a little bit more downside. A lot of times, if you're playing volatile options where it's short dated and they move quickly, you could easily get hit for 20% stop and the trade still work out in your favor. Right. That's definitely happened to everybody. Right. But what I do from there is now I look and go, okay, look, I've got room below me. No matter what, if my 40% stop loss hits, there's more than likely that trade is not working out. Right. There's more than likely, right? 40% is more than likely that trade's not working out. Okay. But once that trade starts going green, then I move the stop to 20%. Right. And I start trailing it. And now I'm like, I've created this little sandwich. Okay. But what also that 40% allows me to do, it just allows me to put my stop loss so it's on my screen after I get into the trade. And then yesterday and today, the homework that we had for the group was what? As long as 408 holds, we buy 408, we buy the dip. Well, yesterday we got down to 409. My stop loss was just 408. It was like, if we break under SPY 408, then I will get out. Right. There wasn't a contract stop loss. Same thing as today, right? We held 408 at open, and what do? We ripped up. And I just said, my stop loss is on a new low of the day. Okay. Yep. Now, granted, the 40% stop that was already sitting there was way lower than 408. Okay. And what you could do is you could move that stop up and it will curate and it will show you what it equates to on the chart that you're trading. For my example was SPY. Okay.
Yeah. And it's not about getting rich overnight, guys, right? Especially with a small account. It's about becoming consistent, compounding those gains. Don't look to make money, look to execute good trades, and the money will come. Now, for everyone, I know everyone's been waiting for this part, the strategy, everyone's favorite part, right? So I do have a solid strategy. It has about 85 to 90% win rate on it, right? It's called the BBR strategy, right? One strategy to rule them all, one strategy to find them, one strategy to bring them all and in the money, buying them, right? So so CBR, people ask me, what does that mean? Well, it's bounce, break, and reject, right? So I break it down very simple for you guys. Stocks only do these three things and three things only. They only do three things ever. They will bounce on a support, they will reject a resistance, they will break a support, or they will break a resistance, right? That's it. So if you start to look at trading like this, it makes it so much more simple. What is the market doing? Well, it's either bouncing off a support, it's either rejecting a resistance, or it's breaking through a support or breaking through a resistance. It can only do three things. That's all it's ever doing, right? So if you guys want to open up your charts, whatever you do TA on right now, open those up. And this is one thing to always mark down. If you want to take a screenshot of this, please go ahead. Levels to know and levels to mark, right? So you need to plot and know these levels every single day. Pre-market high, pre-market low, the previous day's high, and the previous day's low, right? So these levels play out every single day. And I guarantee you, when you start marking these levels out, I guarantee you the stocks will either bounce, reject, or break through these levels, right? They will either bounce greatly on it, they will reject greatly on it, get a nice reject, or they will break out from them, right? Or break down from them, right? So know these levels. The opening print is pretty good as well, but the pre-market high, pre-market low, previous day high, and previous day low should always be marked.
Yep.
And as you're going through intraday, right? Any intraday big support resistances that aren't these levels, you need to start marking those too, right? So if we come up to a resistance and it's not these levels and we break down from it, right? Mark that. Cool, that's a resistance. Because I guarantee if we break out from that, later in the day, we're going to come down and we're going to touch that as support. I guarantee it. Happens 9 out of 10 times, right?
Yep.
So always mark intraday big support and resistance levels while you're trading, right? So one thing to note about these levels, right? If we're above pre-market high, it's a high probability we'll head higher.
Yep.
If we are above pre-market high and yesterday's high, that's an even bigger probability that we're going to head higher, right? The momentum and the trend is up now, right? We're breaking up, that trend is now up. I guarantee that 9 out of 10 times, right? It's going to hold those as support and we're going to keep continuing higher, right? So know these levels, know that about the pre-market high, know that about yesterday's high, right? If we break them, probabilities we head higher, the momentum is up, the trend is clearly up, right? And now the same thing goes for the pre-market low and yesterday's low, right? So if we're coming down below pre-market low, right? Probability we had lower. If we're down below pre-market low and yesterday's low, right? Shows us sellers are in control. More than likely, the highest probability is that we keep heading lower, right? We'll obviously get back tests to those, but throughout the day, we're probably going to head lower, right? And then intraday support and resistance levels can act the same as above. Now, mark these on your chart if you want to use this strategy, right? EMAs that I use, the 8 EMA, the 13, the 48, and the 200 EMA, right? So how do we use these? What do they mean? Well, the 200, as I think we all learn and know, the 200 is one of the biggest bounce or reject levels ever, especially on the daily, right? We learned that on the daily. But guess what? That applies to the 5-minute. That applies to the 2-minute, which we use on this strategy, right? So the 200 still applies. If we're above the 200 EMA, that's bullish. If we're below the 200 EMA, that's bearish, right? So just think about that 200 as a bull or bear sign. If we're above it, it shows that the market is bullish. If we're below it, it shows that we're bearish, right? The 13 and the 48 are my pullback or short levels, right? So we're above the 200, and I'll give you guys examples on charts after this. If we're above the 200, it shows we're bullish, right? We have a 1348 cross. So now what do? Is I look for a flag out, right? A back test into either the 13 or the 48, right? So the 13 is my first line of defense. If we come back down to the 48, that's my last line of defense, right? But if we crossed if we're above the 200 and it breaks the 13 and it hits the 48, more than likely the highest probability is we're going to bounce off that 48 because we're above the 200. So we're bullish and we're in a nice trend, right?
Mhm.
And for the 8 EMA, I use that as my trend indicator. So I know a lot of you or a lot of people like to use the 9. It's the same thing, guys, the 8 or the 9. Should be no argument which one's better. They're literally the same exact line. Maybe we can't even see the
Yeah.
difference, honestly.
Yep.
So
Just
I like to use the 8.
I use the 8 as well, but I know plenty of people that use the 9.
Exactly.
You know what I mean? And they all work out. We all make money. It all works
So
out in the end. So
once I'm in that actual trade, then I go to the 5-minute, 15-minute, and I ride that 8 EMA until we break it, right? Because the trend is your friend until it bends, right? And now we're looking for confluences, right? So bullish, bearish patterns like bull flags, bear flags. So if we're above the 200, right, the 1348 EMA cross, right? The 13 crosses the 48, and we're bull flagging into the 13, right? These are my confluences, right? So it's showing me, okay, I got a bull flag into the 13, the 1348 cross. We're above the 200, right? All these things are showing me this is a high probability A plus setup for me now, right?
yep.
So let's exit this and let's start looking at some charts. Why don't we?
I think today had a lot of great examples of showing, especially SPY holding 408. That was a huge level we had marked. Once we got out of the opening action, we flagged out twice into the MAs and held and ended up continuing up higher.
All right.
But
So now
go
let's
ahead.
look. So let's now put this into, give an example into real life, right? Into real life. So now this 200, we're looking at AMD, and I like to use the 2-minute to take my entries on this strategy. Now, guys, I do have a thread on my Twitter. So I do have a thread that breaks this down that you guys can see after this, but here's a good example of the bearish opportunity that you could have taken on this trade today, right? So AMD, for example, I only like to trade 3 tickers really: AMD, NVIDIA, Meta sometimes, and then SPY, right? We have a question: how do you identify it to stock to trade? Well, I trade the same things over and over and over again, right? So pick pretty much 3, trade them over and over and over again, and that's how you get a good
Yep.
watch list. So
You
look at
should
this, for
know,
example.
no 3 to 5 tickers like the back of your hand. That's all you need. Any more than that, you're using way too much brain power. Go ahead.
So blue line, this is the 200, right? So what did we talk about earlier? Type it in the chat. If we're below the 200, what does that mean? Is it bullish or bearish? Type that in the chat.
Short,
Bearish.
bearish.
Good.
Yep.
Good
Good.
job. Good job.
Bearish. Good job, guys. Paying attention. Nice.
So we're below the 200, it's bearish, right?
Bing bong. Nice.
This green line is the 13. This red line right here is the 48. So you guys all see that, right? Green line is the 13. Red line is the 48, right? So we're waiting for a nice pullback to them, right? And what we're doing is waiting for a trend, right? So we know that we're bearish. So we're really looking to take some shorts at some point, right?
Yep.
What happens here? The 13 crosses the 48. Cool. We're below the 200. 13 crosses the 48, right? So now to look for a trend, one thing we want to look for about these MAs is we kind of want to see them start pulling apart, right? If they start expanding like this, right? Do you guys see how they start expanding out and they're not all bunched up like that?
Yep.
That shows us that we're now entering into a nice trend. When we're in a chop zone like this, right?
They
Very
cross
choppy,
over. They cross over each other all the time.
right?
When they convert or diverge from each other, guys, when they create space, like Justin's saying, right? You see how the green starts to diverge from the orange, right?
Red.
Orange.
There's red.
Red.
Sorry.
The red. Yep. They, right? That's showing that when they start to diverge, it shows that there's a trend being formed, right? In this case, having to short should have always been on your mind because you knew we were under the 200 MA. Right now, go ahead, Justin. You finish it.
Yeah. So we're under the 200. We got the 13 cross the 48. And like I said, we were using the 13 as our first defense, right? So one thing we could do is wait a little bit so they more to come apart like that. Please trade more than just the EMAs, combine my price and volume. Well, if you don't like my strategy, you can leave. Simple as that. So obviously price action, like just leave then. Obviously price action, obviously volume. But look at this, for example, right? So the 13 crosses the 48. Now, what are we looking for, right? What are we looking for, right? More diversion, right? So now we're looking at taking a trade off of the 13, and our last line of defense is the 48. So what are we looking at here, right? We are putting in higher lows or higher or lower highs, right? We're putting in lower highs, right? So we get this cross, we're below the 200, lower high, comes back down, another lower high. So this would be a good opportunity to show, okay, right? A good opportunity to take a trade, to take an entry right here, right?
Yep.
And now we could write it down for the rest of the day. So let's look at the 8 EMA. And now let's look, once we're in that trade, look what happens, right? So we took the trade around here, and now we're writing that 8 EMA. So let me take out these other indicators. And I've been trading for 10 years, Jack. So please don't try to come in here and tell me what to do. Appreciate it though. So now we're coming in here, and now we can ride that 8 EMA for the trend all the way down, right? We could ride that trend all the way down. And now what I like to do is especially go to the 15-minute. And the 15-minute is going to help us stay in that trade for longer, right? So we're in that trade, and look, it never breaks. And we could ride that trend all the way down until we break the trend, right? So do you guys see that? How the 8 EMA is a nice trend indicator?
Somebody asked a good question, Justin. They said, can you explain the confluence between the 15, 5, and 2-minute charts with an example, please? So Justin will probably show you an example, but I'll tell you this. Your entries, right? Your entries should likely be on lower time frames, right? Because it shows you price in that time, and you can see it a lot more clear, right? So I like to use the 5-minute 15. Justin uses the 2 and 5. Okay. What you can do after you get into the position is now zoom out to larger time frames like the 15, and you can really see the trend working right from there.
Yeah. So when they're all mashed together, that means chop, right?
Yes, exactly. No, she said it. Yeah. So, okay. This is awesome. So when trading yoga girl says it's awesome when lines are all meshed together, that means chop. But once they separate, that means the trend is trying to form. Correct. You have to identify, is this a chop day or a trend day for sure, right?
Absolutely.
Okay.
Okay. Yeah, definitely look at the price action, right? So what is it showing us, right? Are we putting in lower highs, higher lows, right? Another thing you could use is so one thing you can use obviously is reversal candlestick patterns, things like that, right? So on the second trade, right? What is this? This nice hammer, right? Boom, hammer. And then we started dropping from there. So there's one way to look at price action like that. There's also fair value gaps, break of structure.
I think today's pretty blatant for a lot of stocks had a double top. You know, as we were kind of starting to trend up from the bottoms today. We hit a massive double top, and we saw huge volume come in on the sell, especially if you're trading the indexes. We were trading ES and SPY. You saw, right? You saw that they had reacted that way, and then they never got back above their other EAs, like EMAs, right? On any time frame. It was just a straight sell-off. Okay, up until basically the close. It really lasted the entire last hour, about roughly.
Yeah. Yeah. So a lot of people, you know, especially people are like, oh, price action, price action. Yes, price action is very important. And the people who talk about price action a lot say, oh, the EMAs are lagging. Yes, they are lagging indicators, right? But I'm giving you guys this strategy. It has about a 85 to 90% win rate.
Yeah.
Right.
Guys,
so if you don't like it, you don't have to take it. Right.
Yeah. You have to realize when you identify, right, when he's talking about that hammer, he sees the second rejection off of that EMA, right? And he sees that we are making lower highs, right? I mean, yes, there's a ton of confluence with everything that comes together, right? So don't forget that. And then you could see after you enter the trade, you want to use these MAs as the guide for the trend to make sure, look, why would I exit the trade if we're still going down? Haven't had any candle closes above any of the major, right? After we pretty much got below in the afternoon, below the red one, to 48, right? 48.
Yeah, 48.
Right. We never went and did anything after that. We never got back above it. Right. And you could see the exhaustion of the candlesticks above there. Anything that you see when they have wicks up like that, that's buyer exhaustion, sellers stepping in.
Yeah.
Right.
And then we can also see when we get down to this level, right? We had a nice little bear flag right here, and then we just dropped off. Obviously, Biden spoke today, so we had a little bit of news right there. But yeah, so we want to use all these things mixed together, not just, oh, it's touching the EMA. So I don't want you guys to think, oh, it's just touching the EMA. We're just going to take a trade right here.
Yeah.
That's not what it's about. We're using it all together, right? Like I just talked about before, bear flag, bull flag, hammer candle, right? Right. So all of these things mixed together will give you the story. It will tell you a story of where to take a trade, where the highest probability trade is now occurring, right? Those are confluences, right?
Yep. So question. Okay. Actually, Trading Girl asked a good question. She said, do wicks both long and short mean exhaustion? So what wicks? Okay. Remember, always take trading down to its simplest form. Okay. Why does the stock go up? There are more buyers than there are sellers. Why does the stock go down? There are more sellers than there are buyers. Every single candlestick on every single time frame is a representation of I call it the battle between, okay, the battle between buyers and sellers. Okay, the battle between buyers and sellers. You want to me, those candlesticks, I always like, me personally, you guys hear me talk about it, I love to use the hammer candle. I love the hammer candle, right? Usually it has a long wick down or a long wick up, right? And that shows you what? Let's say we have a hammer candle down, okay? That means a long wick down. That means sellers brought it all the way down and were so weak that buyers brought it all the way back up. That shows me that buyers are awake and live at that level, right? And if that happens at a supply or demand level, hopefully a demand level, if we're just playing a regular hammer, that shows me it's more than likely the buyers are awake and they're thriving and it's going to take this thing back up, right? So the wicks, yes, they're more important to me when they're entering or getting near areas of supply and demand.
So why EMA and not SMA? The EMA plays to more of the current average versus a longer average, right? It shows more of a closer price range, right?
Yeah.
Price action to the price, right?
I think it reacts. It's a little bit
faster.
of a higher reaction. Yeah. Than the simple moving average versus exponential moving average.
So let's take an example now of a bullish setup, right? So Google, we took this one for 91%, right? So what was happening with Google? Well, I could tell you, right? So we're above pre-market high, right? Above pre-market high right here.
Yep.
When we opened up, yeah, we ran up and then we sold off. But what happened? We put in a higher low. We didn't break low of the day, right?
Well, first off, we're above what? The 200, right?
Above the 200.
200. That helps. Then we got above I'm sorry, we got above the pre-market high, right?
Yeah.
And then we got above yesterday's close, which you're about to go into, but go ahead.
Yeah. So we're above the 200. We bounced off of it, right? And then what happened, right? Buyers defended, right? There was demand and we ran all the way up. And guess what happened? We flagged out, right? Above 200, right? We had to have all these things added together. It doesn't just mean, oh, I'm going to take calls, right? So we need to have a bunch of things to tell the story, right? So we're above the 200. We have the 1348 crossed, right? We're above the pre-market high, right? We're above previous day high, right? And guess what happened? We flagged out, right? We had a nice bull flag right into this area of support as well, right into the 13 EMA, right? So we took calls right here, right? We took calls right here and then we ran them up for 91%. So you guys see how all of these things are added together.
Yep.
Yeah, it was double bottom as well.
Yeah, it's a
Oh,
double bottom. I mean, there's a million things you could talk about right here,
yeah.
right? Right. Double bottom through the pre-market high, above yesterday's high, right? Above yesterday's close. Okay.
Mhm.
So it's above previous day high and close, right? So you're like, okay, we're in a good spot here. We're going to have some continuation higher, likely. And we're just we cannot get below these MAs, right? And it's after, it's after that first hour of trading too, which usually depicts whether we're going to be having a trend day or a range day too, right? And we seem to be breaking out of the range, right? We're flagging underneath the opening range high.
Mhm.
Okay, into these EMAs, doesn't want to go lower. Boom. There's all these things adding up into the same.
Yeah. So we have a bunch of things adding up for a high probability trade, right? That doesn't mean the trade is going to work out, right? But this is giving us our highest probability right here, right?
Hmm.
There's multiple things. We double bottom, bounced off to 200, never created a new low. We both flagged out. We're above pre-market high. We're above previous day high, right? 1348 cross above the 200, both flag out into this major now support, right? It was a major resistance area, turned to support. So all these things added together, right, are giving me my highest probability setup, right?
Yep.
And now we can trend is your friend, right? So I'll take these off and show you guys, right? The 8. So now let's go to the 5-minute.
Real quick, somebody says, do you ever use VWAP? And if not, why? I have it on my chart. I'm not going to lie. I have the middle VWAP line. I don't really use it. Okay. I don't really use it. Sometimes you can see like, oh, it's going up into VWAP. You can just, I'm not a VWAP trader. Personal preference. I don't think there's any right or wrong. Some people use it and it works
Yeah.
fine for them. Others don't, and it works fine for them too. So yeah, that's
Yeah.
just a
So
personal
VWAP,
preference. Yep.
I've definitely used it before. VWAP's a great pivot point level, right? If we're above, obviously that you could show that that's bullish. If we're below it, that's bearish, right? It's a great pivot level indicator. I don't personally use it, right? So I'm going showing you guys this specific strategy that has a 85 to 90% win rate, right?
Yep. Yep.
Showing
So
you
someone
specifically
says,
what this is.
your thoughts on trading tick chart versus mid chart? I've never looked at a tick chart, to be honest. And I don't even look at the 1 minute, to be honest with you. So thoughts on
Don't go
trading
below the
the
2
different.
minute.
Yeah.
Don't ever use
Thoughts
the
on
1
trading
minute.
it, guys. It's there. I'm telling you, like the holy grail thing Justin mentioned. Listen, like it, if there was this holy grail, everybody would know about it. If there was one perfect chart to trade with one perfect time frame, everyone would trade it. And everybody would know about this. Yep. Yeah. If you're in the Wolves of Wealth community, this will be posted later.
Yeah. So I've set stop loss for sometimes they get filled. Like I set a stop order at 147, then the stock falls.
That's going to happen on your broker sometimes, especially
Absolutely.
if it's a limit order.
Limit
That's why you need.
orders don't always get filled, right? So they're
Yeah.
not for sure, right? They can move past them, right? There has to be the market
Typically
makers have to
a
fill
market
them, right?
order will sell you if you market a certain level too on your stop. So, but that's the other thing too is, a lot of people are like, well, I put my stops on and go away from my screen. If I'm in a trade, I never go away from my screen, right? Or I never log off. I might put the stop on and go to the restroom or something, whatever. But yeah, I always like to be visually seeing it. Yeah. Okay. And
Yeah, above below.
guys,
So
when in doubt, always zoom out. Okay. Always zoom out. Somebody just asked, how do you tell it's a range day? Well, first off, you want to see, okay, where is the stock trading at, right? Where is the stock trading? Is it at a huge resistance? And if we fail it early in the morning and don't make a run through after the initial balance, it's more than likely, right, that we will have a range day. Okay.
yeah.
Usually you'll see a breakout within the first hour and a half. Okay. And any back test of that break area. And if it continues to get bought up, that's how you know it's not going to be a range day for the most part. Yeah.
Yeah. So here's a good range day on SPY that we had February 10th, right? So we broke out, we ran up to the high, we ran up to a high, right? And then we failed to go higher.
Yep.
And then we failed to go any lower, right? So you can't, there's not going to be something where you're like, oh, I know all day is going to be range day, right?
Yeah.
At some point it could break out to either side, but if it's not breaking out above, right? Like we have a shooting star here, we ran down. If it's not breaking out, above the previous high, like it created in the first high it did, then obviously it's ranging, right? If we're
Yep.
not breaking out below the previous low it created,
Yep.
nice range day.
Yep.
So the first major high and the first major low, we want to see that break and hold to create a trend up or create a trend
Yeah.
down, right?
Yep. So you can use the opening range. There's a lot of opening range indicators on these brokers, and they'll slap it on there after the first 5 minutes, 15 minutes, 30 minutes, whatever you want to set it at. It'll give you the opening range high and low. I like to use kind of the 15-minute as my opening range. So you can take the first 15-minute candle that happens in the first 15 minutes, mark the high, mark the low, and then play it off that.
And do we have any other questions?
I think this will be a good one to end on right here.
Yeah.
This one says, so Google closed below its 200 EMA in the 5 and 15. Based on tomorrow's open, when would be a good time to enter a call or put? Okay, this is a loaded question. This is tough. Tomorrow, we could gap up, right? We could gap up. Anything could happen overnight, right? Anything could happen overnight. So always remember that. Okay, always remember that. But for me, I would think if we stay close below that EMA and we're still below any other EMAs of smaller EMAs, you'll want to think if we don't break above that 200, if we go into the 200, you'll probably want to look to take a reject. Justin might have a different take on the.
Yeah, I mean, that's the same thing. We just talked about that. If we're below the 200, right? Showing it's bearish, right?
Yep.
We have that 13 cross the 48, right? The 13 crosses the 48 down for this specific strategy.
Yep.
We're going to look for that price action for a nice reversal candle. We're going to look for lower highs, right? Like we just talked about with the AMD trade, right? And that would be a good time to take the trade, right?
Yep.
So you have to understand how the strategy works, right? It's not just, oh, we're below this, we're below that, right?
He said, Joe says 408 is my new favorite number. 408, baby. 408. You're either a member or you're a 2-minute drill watcher. 408's been that level.
Mm-hmm.
So good for you. I think we've been running about an hour and a half now. So we want to make sure, don't want to overload you guys with information, but I thought that was pretty good. I think, guys, most importantly, the psychology behind trading doesn't matter what your strategy is. Doesn't matter what your edge is, but you have to have discipline in risk management. You have to. That's the psychology that you cannot change. If I was going to end you guys with anything, it's treat this with the respect and the professionalism it needs. Okay. And if you do that, okay, if you guys do that, usually good things will come from it. Right. If you do not prepare for your math test, if you do not prepare for work the next day, for a presentation, are you expecting to perform well? Right? No, not at all. Okay. If you go to the gym once a month, do you think you're going to be in shape? Probably not. Okay. All right. That's all I got, guys.
That's all we got. We have nothing to sell you guys. We just appreciate you guys coming out for us.
Yep.
Hope you guys learned something. Be on for the next. We'll do obviously another masterclass at another time. And on my Twitter, I have a whole thread on the strategy, right? And I'll go every single day. If you guys follow me, I'll keep putting out more information on this strategy, right? So if you appreciate it, give us a shout out. That's all that we ask. Other than that, super appreciate you guys for coming out
thanks
today.
for coming out. Thanks for coming out. All of our Wolves of Wealth community members that are in here right now, you better do the homework. You better watch the 2-minute drill. You better wake up early and you better not do anything fucking stupid.
Yeah, my Twitter is real JG Banks. Real JG Banks. I'll have a check mark, right? So appreciate you guys. Hope you guys learned a lot. Love you guys. We'll all become successful traders. I know it. I know. Last thing I'll end on is a quote I like to always say to people is, you are the best trader that you know. Nobody else is better than you, right? We just have to find that within ourselves, right? You are the best trader that you know. You just don't know that yet, right? So we're going to kill it. It's Friday. Tomorrow, risk light or risk off. Don't overtrade. Don't size too heavy.
Only use a portion of profits, please.
Yeah, I want to use a
Yep.
portion of profits. Appreciate you guys. And yeah, we'll see you next time. All right. Thanks, guys.
Later.